Well, hi everyone, welcome to Buffett and Beyond Research, and today we're going over Oracle, stock of the week, and boy, oh boy, what a volatile stock this has been. It was up over 320%, then lost half of it, then lost more of it, then gained some of it back, and oh boy, we're going to see the chart in a second. So this is Oracle, June 13th, 2026. And remember, folks, if you want to watch people walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett invests now. And let's look at the general outlook or the general description of Oracle. And they provide products and services that addresses all the aspects of corporate information, technology, environments, whatever that means. Products are delivered by a range of deployment models, including, now here we go, on-premise, cloud-based, and hybrid. 2025 revenue breakdown, cloud services and license support, 86%. That's where the money's coming from. And let's look at some recent information on this company. Now, Oracle Corporation reported fiscal fourth quarter 2026 earnings on June 10th, and the results were strong, but investors focused on the company's enormous AI spending plans. So they did a little bit better than the market expected, but the market is worried about what it's about to do, and we're reading that right now. Now, Oracle continues to benefit from large AI infrastructure contracts. So there's money coming in, including its multi-year cloud agreement with OpenAI. That's a big one right there. Now, the company is positioning itself as a major AI infrastructure provider along Amazon and Microsoft. So despite the earnings beat, Oracle shares dropped sharply after the report. And here it goes, because management announced that 2027 capital expenditures of 90 to 95 billion, far above Wall Street expectations. Now, it plans to raise nearly 40 billion through debt and equity financing. So we're going to look at these numbers here a little bit and see, okay, what's it going to do to the present stock positions right now? Now, negative free cash flow due to massive AI data center construction spending. Investors appear concerned that Oracle is spending heavily today. This is important. Spending heavily today for growth that may take years to fully materialize. Very, very iffy right in there, folks. Now, Oracle remains a key partner in the massive AI infrastructure initiative known as Stargate LLC, involving OpenAI. There it is again, the OpenAI, and other partners. Now, OpenAI is going public later this year. Yes, it is. And Oracle is building substantial data center capacity to support these contracts, which is a major reason for the surge in capital spending. Now, OpenAI is not making any money right now, and that's a question that I'm asking. And when it goes public, we'll see all those books, folks. We'll be able to look at them ourselves. And so the future is what Oracle is spending money on. And of course, is OpenAI going to be able to be the leader in OpenAI? So, but Larry Ellison, who's one of the owners and the founder of Oracle, he says, now this is him saying this, Oracle will be the center of the AI craze, says Larry Ellison. So that's what we have to see. Let's take a further look at this, though, folks. Now, when we look at the blue is the average stock out there, the average large cap stock, I should say, and green is Oracle. And we look at the clean surplus return on equity, and they're about the same. And I liken this to the bank account example. And if you want to put your money in a bank, would you rather put it in the S&P 500 or would you rather put it in Oracle? Good question here, because they're about the same. Net income, now these are the clean surplus earnings. The average large cap stock out there is ahead of Oracle. But when it comes to revenue, money actually coming in, Oracle is beating the average stock, 2 to 1. But is it bringing it to the bottom line? And you can see that no, it's not. So the net income, the earnings should be higher here. So Oracle is not converting this revenue into profit for its shareholders at this particular point. Now, when we look at the clean surplus return on equity, remember the average stock is about 13.5%. So when we look at the average return on equity, we can see Oracle is now a little bit higher than the average stock. All right, so we'll give it the benefit of the doubt. And don't forget, this 2027 is a long way off right now. Retention rate, 73%, call it. That means it's taken 73% of what it's making to put it back into the company in order to grow. Well, if it has all these projections and everything, why isn't it putting 100% back in? That's my personal question. Now, when we look at the years to pay debt, this is Buffett's rough rule of thumb, which I kind of like, and we've been using it a lot. And he says if a company takes all the money it's making, how long will it take to pay off that debt? His rule of thumb is 5 years or less. Our rule of thumb is 3 years or less. And here's Oracle taking almost 6 years to pay off its debt if it had to. Now, think back to what we were talking about before, because what we were talking about was Oracle expects to raise, and let's go back there, $40 billion through debt and equity. That means it's going to not only raise its debt, but it's going to dilute the present shares of the company right now, and it's basing it all on the contracts that are coming from a company that is not public yet. So we have some questions here, folks. In other words, the years to pay debt may go up because, well, they will go up in the beginning until they start generating income from that money they're going to borrow. And don't forget, part of that money that they borrow, or part of that money that they're raising, is from equity. That means it has to issue more shares. That means the present shares are going to be diluted. And that is why we see this chart. Black line is the S&P 500, and this is Oracle over 1 year, shot way up, and then it came way down, and then it starts shooting way up again, because when you throw OpenAI into the mix, the term OpenAI, well, that's the leader in AI, isn't it? Well, we'll see when it comes public how it reacts to Microsoft, how it reacts to Amazon, how it reacts to the other companies out there that are in this. It seems like everybody that we talk about is in the cloud business. And who's up there? Yeah, Amazon. Don't forget whole Amazon there. But you can see where the stock dropped off big time right in here when they found out, or when the market found out they were going to raise $40 billion through debt and equity, and they already have a lot of debt, and it will reduce the value of the equity, the present shareholders, unless it starts making money. And when we look at the past 5 years, yeah, we can see that back in here, 3 years ago, it was going along with the S&P 500, and that's what our numbers show us. The numbers show us that the stock is pretty much an average stock when it comes to the clean surplus ROE. And that's what it was showing back here in its price movement. Then it started gaining traction when it started talking about AI and that it wanted to be the center of the AI business. And then when it found out it had the likings or contracts from OpenAI, shot way up. And then when they said, well, those are just contracts and OpenAI is not even public yet, it dropped all the way back down. Then it came back up again. And now just this recent raising of $40 billion through debt and equity, the stock dropped a lot right in here. So where do we stand with this stock, folks? And that's the question. We really don't know where we stand with this stock. But if you believe Larry Ellison, he says it's going to be the center of the AI craze. Well, maybe it will, maybe it won't. But it's got contracts from a company, and we don't know about it. We know the company is part of the AI, in fact, maybe the leader out there of AI, and we'll see. We'll see if money comes in. But don't forget, AI or OpenAI is not making any money yet. And we'll see what's going on with this company as these other companies come public for this year. Will Oracle be able to be part of that? And will the money that it's borrowing and raising be able to fulfill the contracts that it has open with OpenAI? And of course, OpenAI has to start making money in order to pay Oracle the money for those contracts that it just signed with them. So folks, remember our goal: build your wealth faster and safer with better than average stocks. And here's that word, safer. Is Oracle going to be one of those safe stocks that we want in our portfolio going forward, or is it more of a gamble at this particular point? Because don't forget, we've got all those intertwining negotiations and contracts that each of these large companies have with each other, and somebody better start making a lot of money from it. We know the cloud out there, but the cloud is, you have Google, you have Microsoft, you have Amazon. And so now here we have another group of characters saying they're in the cloud business. Don't forget, this company's getting 85% of its income right now from the cloud. But how is it going to make more money from the cloud without taking some of the business from the companies that we already have in our portfolios? So, folks, building wealth faster and safer. And this is the question right in here. Is it safer than the average stocks out there? So, folks, we had another difficult week out there, and our signals are turning down. Let's see if they can turn back up or not. And we'll just have to wait for this coming week to see where the market wants to go. And don't forget, Fed meeting coming in a couple of days this coming week. So we'll see what's going on. And I'm recording this on Thursday right now. And tomorrow, Friday, guess what? Yeah, SpaceX becomes a public company. It issues its IPO. We'll see how that does. Will that take money away from OpenAI when OpenAI goes public in a couple of months? So that's the questions that we have out there. And don't forget, Anthropic has to go public this year also. So there's a lot of money out there that may come from some of the stocks we own that goes into these new public offerings. So we'll see what happens, folks. Meanwhile, you go out there, you have a safe weekend, be healthy, be safe, be with your loved ones. Folks, we'll see you back here in a couple of days. It's going to be an exciting week coming up.